Is Donald Trump a triple threat to the US municipal bond market? And that seems to have been the conclusion of investors, and it's why the $3.8 trillion market for state and local government debt has suffered some of the sharpest sell-offs of fixed income markets since the elections. And here's the trio of concerns. And the first isn't unique to munis. A Trumpian stimulus from tax cuts and infrastructure incentives would likely cause the Federal Reserve to raise interest rates faster than planned, as Chair Janet Yellen hinted this week. Now that will hit bond prices broadly. The second is that muni bonds are exempt from tax. And if personal taxes are cut under the Trump administration, that benefit is relatively less significant. Thirdly, tax reform plans floating around Capitol Hill occasionally propose repeal of munis' tax-exempt status entirely as a way of paying for tax cuts elsewhere. Munis have powerful defenders on the Hill, so that's an outlying threat. But it can't be dismissed entirely following the Republican sweep of Congress. US municipal bonds have returned minus 3.1% since the election, and the extra yield that munis now offer versus corporate bonds, which was zero as recently as July, has widened dramatically. It's now above its 10-year average of 1.2 percentage points, and that suggests it might be time to look again at the sector. It's not all bad news, you see. If markets are correct in predicting a Trumpian stimulus, that ought to result in higher tax receipts and improved municipal finances. Rising rates also have a dramatic positive effect on public pension deficits, cutting the value of future liabilities and increasing income from bond portfolios. During this period of post-election alarm, the average daily trading volume of shares in the largest muni bond ETF has more than tripled. And with ETF trading affecting underlying muni prices, bargains will be opening up amongst the securities in the underlying indices. A bond backed by California's state income tax revenues, for example, is a different proposition to one backed by road tolls in Omaha, Nebraska, even if the price of both is moving in lockstep because of the broader fund flows. The triple threat, it's real, but it's balanced by positive news, and it's worth digging around for some bargains. Stephen Foley for the Financial Times.